Good morning, everyone, and welcome to the European crossover webinar. And we've just seen market flash PMIs come out. Came out at 51.7 versus 52.9. And take a look here. And we're seeing currently seeing euro at 18.35. We had German flash PMIs come out about half an hour ago, and they came in just a little bit better at 53, with French PMIs at 49, a little bit lower than expected. And UK retail sales had also come out. At the bottom of the hour, we will have flash PMIs for the UK coming out. They're expecting 57.1. And as we come into the States, we will have Canadian new housing prices at 8:30 Eastern, as well as retail sales for Canada. And then we will have market flash PMIs out of the US. That'll be at 9:45 Eastern. We do have consumer confidence. Eurozone consumer confidence, that'll be out at 10 a.m. Eastern. Looking for a number of negative 15.0. And let's see. So once again, like I said, we did have our UK retail sales that came out about a couple of hours ago. And our flash PMIs, once again, out of France, a little bit under expected, or came in a little bit somewhat lower than what they'd expected. Then, of course, as I mentioned, the German PMIs a little bit better than expected, and then Eurozone pretty much in line, just a little bit off. And then we will have UK flash PMIs at the bottom of the hour. Well, yesterday we did go and see a reversal of the reversal, and we'll go and take a look at that. And we take a look at the NASDAQ and as well as the S&Ps. And we've seen these markets sell off only to turn around and reverse right back. Actually, with the NASDAQ, actually reverse back and then turn around and even make newer highs, new all-time highs. I had been short here and then rode this out and was able to cover on the way down 2 prior days of the day before, and stayed flat until we came in the morning and we saw a nice move up, and I stepped in and shorted, and I ended up myself getting stopped out in Europe. I was willing to go and hang on, but we do have monthly options expiration, and I definitely wouldn't want to hold over the weekend. So unfortunately I got stopped at that, and that was frustrating. We do have some 161% levels here. One of the other gentlemen, I can't remember who it was, had mentioned, I think it's Brooke, had mentioned that actually if you go to the March 23 low, this 161% off of those lows could actually push us up to 11,600. But once again, like I said, I definitely would not want to be carried short over the weekend. And with the options expiration, it's going to hold it up here. So that was rather frustrating, to go on and say the least. We saw pretty much the same thing here in FX also. One moment. As we saw the euro come off yesterday, only to dip back and then turn around and rally all the way back. And we saw that across the board. We saw even the cable come up to this 132 and then even push beyond that. So it's just been something else. Like I said, how these markets have held. It's been frustrating. I myself would have thought, and I think many people did, was thinking, hey, that's it here. We'll start to see, not looking for a massive correction, but a little bit of a dip. But Once again, these markets continue to push higher, and as I mentioned, rather frustrating here at this point. This was, I guess, frustrating for many, frustrating for me. Um, I had actually done well holding on to it, and then thought I was actually I didn't think we would even rally back. I thought I'd missed my opportunity, so actually was came in at a very good level, only to see the market continue to move higher. And we can go in and take a look even in the equities themselves. It's just crazy. Look at that, another new all-time high Apple, another move up in here in Microsoft. Look at Facebook, Amazon, Nvidia. Look at that. Actually made it right to about 500. I mean, these are just moves. I mean, if you look at it, a little bit less than a month ago, we were trading what here 400. That's that's a 25% gain in less than a month. I mean, it's just something else. And Tesla took out 2,000, and it's just like it's now Tesla I can kind of I understand because that market has just continued to move higher, and it's almost into a world of its own. But some of these other ones are just unbelievable. Microsoft had come down to this 209, only to turn around and rip right back up and even jump above 214. We'll go on and take a look at the news. The Australian dollar set for a ninth straight weekly gain. New Zealand dollar is feeble. The Australian dollar was posted its ninth straight weekly rise on Friday, whilst New Zealand counterpart weakened as the country's central bank reiterated the need for interest rates to go further down. The Aussie has had a solid run since March, when it hit a bottom of 55.10 as the Australian economy reopened earlier than expected and commodity prices stayed buoyant. Westpac chief economist Bill Evans now expects the Aussie to hit 75 by year end from previous forecasts of 72 and 80 by December 2021. Other factors which are likely to continue to support the odd are the likely ongoing boost to risk, he noted, pointing to central bank and fiscal stimulus globally. The New Zealand dollar was last at 65.40, drifting away from a 1 week high of 66.52 touched on Wednesday. For the week, it's barely changed and is down 2.7% this year so far. The Kiwis' wings have been clipped by a more dovish central bank, which has flagged negative interest rates as one of its policy options. This will have the most impact with Aussie New Zealand cross, and with the Aussie still likely to trade higher in an environment of growing central bank balance sheets. And the euro gains as the dollar hobbled by economic worries. The euro inched higher on Friday with the dollar weighed down by concerns over the strength of the U.S. economy, recovering following a weaker than expected jobs data. The euro traders are preparing for Eurozone manufacturing services purchasing managers, which we did go on and cover, which will highlight how the region's economy is performing as lockdown measures ease. A larger than expected rise in weekly jobless claims in the U.S. and warnings from Fed officials about a recovery in hiring have raised doubts about how quickly the world's economy will bounce back from the coronavirus. The euro has been the biggest beneficiary, surging from 112 to 119 this week. Adam Cole, chief strategist at RBC, indicated the PMI surveys beat data expectations for a third consecutive month, but a slowing pace of recovery was evident in the high-frequency data in Germany. Republican and Democrats are struggling to agree on additional stimulus to boost the economy, in contrast to the Eurozone, where investors are welcomed the scale of the economic package recently launched. The standing performer on Friday was the Chinese yuan. So with that, we're going to move into the analysis. So the euro rolled back on rallied back on Thursday after defending 118. Support on Friday will be 1783 with resistance at 1901. And let's go and move into the cable. And the cable paired back to 3060 before rebounding to move past 32 even. Resistance on Friday will be 3284 with support at 3128. And like I said, I would not expect that this bounce all the way back up here. But nonetheless, we've seen these crazy moves. So once again, support is going to be 3128. And on the upside, 3284. And with the Aussie dollar, the Aussie with a quick turnaround posted a hammer bottom on Thursday. Friday's resistance will be 72.25 with support at 71.41. And we can take a look at the daily. And as I said, you can see here with the hammer bottom after seeing a big reversal. Look at this, a fully, bearish engulfing bar, only to turn around and snap right back again. And moving into the Kiwi. Similar move here in Kiwi, almost. I mean, we did have same thing, uh, a near bearish engulfing bar, but look, we had even tested the upside. We pushed back, and then we turned around and snapped all the way right back. Now, like I said, it still closed a bit bearish, but still, nonetheless, was a good snapback. We're a little bit quiet today. So the Kiwi rebounded on Thursday after a strong reversal. Friday's resistance will be 66.01 with support at 64.89. And as mentioned, 66.01, so that will stay the same here. The dollar CAD slid right back down on Thursday. Support will be 31.40 with resistance at 32.25. Once again, we're trading relatively quiet today at the end of the week. And on to the dollar peso. For whatever reason, didn't save it. It kept it as a dollar CAD. Let me see if. Yeah, it did. So nonetheless, so we had seen pretty good snapback, which took out 2230. The support today is going to be 2202 with resistance at 2215. Same thing, just like the other pairs. You can see super quiet today. Obviously, still under bearish bias. Take a look at the dollar yen. The dollar yen gave up the gains, but on Thursday, but held the bias chart support at 562. Support on Friday will be 551, which is right where we're at, with resistance at 594. Same thing here. We had seen this big reversal on Friday and then turn around on Wednesday, turn around, give it all, most of it, half of it all the way back. Now we're trying to come back. It's just middle of the roading it here in the dollar index. The dollar index on Thursday gave back nearly 50% of the reversal from Wednesday. Support on Friday will be 92.48 with resistance at 93.06. And now take care of the majors. Let's just go and move into the cross rates. We had support for 68.80. We've actually come down yesterday. It came down to 68.73, relatively close. We're still holding near these lows. That moved down to 68.71. We can move it just a little bit lower. I'm not sure if we'll break too much lower, but support for today would be right there at 68.53. And on the upside, it's going to be right there at that close, 69.56. And on to the euro yen. upside we had was for 25.95 with a downside of 24.92. We've even pressed beyond that at this point. Already been a decent move. We're actually going to go right here with this bar there, the close here, and that would take us to 24.56. I'm not sure how much lower we're going to move for today, but it'd be 24.56 with the upside coming here with this bar right there, which would be 25.33. On the downside, we were looking for possibly as low as 64.37. Today has been 64.46. We'll stay with this 64. Actually, these two lows here, which would be 64.34, we'll just move it just a hair lower. And the upside is going to be right there, 65.06. And the Euro Kiwi on the dip back, we're looking as far as 79.65. With the upside at 81.18. I'm not sure why we would have had it all the way dipping down here. Oh, well, we had seen this, we saw the snapback come back all the way, and so I guess we can see why it would be that low here. Did have this, and let's go and take a look at the 2-hour chart. Right there would be support, which would be 80.76. And resistance of the close on these bars here, which would be 81.62. And with the Aussie yen, we're looking for a move. Well, bias chart report would come in at 75.43. That is going to go and remain the same. And on the upside, we had 76.49. And that would still stay the same here, 76.49. So no changes in the Aussie yen. And looking here on the daily, still keeping it pretty tight up in here in the guppy. Upside would be right there at 39.76. And on the downside right there, which would be 38.58. Still, like I said, a very tight trading range to end the week, at least so far. We haven't moved into the U.S. session. Then lastly, with the sterling odd, on the upside, we finally made it up here to 84.03. Big key level there too. And we'll move into the 2-hour for the support. Which would be right there, 83.14. Looks like we can now probably start to turn this to bullish bias. We'll see how it closes today, but if we can close here above this bar, yeah, we'd be flipping the bias to bullish. We'll wait. That's going to do it here for FX. We can go and take a look where we stand here with, have them take a look here with gold. Gold's starting to pare back just a bit here. You can see how well we held up. This once again is frustrating for me with the NASDAQ, which you can see yesterday, remember we had our resistance we talked about at 1966. Actually, that number comes in at 1973 right there. It was that bar that we're looking at if it made it to rotate lower. And it's been relatively sanguine in gold overall. When you look at this, obviously, like I said, frustrating thing for me was, like I said, to see this NASDAQ do well here, holding it and covered in Asia. And then I thought I had missed out an opportunity to get back short. We did back, and then we come back into this level, and then we just, and really there was no, on the, here, I couldn't say, oh, there's a definite strong reversal here. And even this close was still below the high, so it looked like it'd almost be, almost like a double top. Not yet, but I'm saying you can see here where we close. It wasn't until on the closing bar, but once again, no one was going to stand in the way, and then we worked just a little bit higher. We have a little bit of a graystone doji, but we're still way up here, and you got to think who's going to fight this on a Friday. And then when you look at the top 8 stocks, which are now moving the market with new highs in Apple and Microsoft back above 214 closing, and then of course, like I said, Amazon up here and Facebook, and there's nothing to say, okay, now we're seeing all this divergence. So at least in the top 8 stocks, so that's where that's moving. But like I said, gold's still relatively quiet and sanguine here. We'll see how today closes. We do have some options expiration in equities, so there we go. And I'll go and get the bias chart posted, and we'll see you in the chat room. And thanks for joining us here on the European Crossover webinar.